The market was super green today, and we're going to be talking about two popular but beaten down Canadian stocks and whether you should buy them. Welcome back to the channel. It's me, Adam. You're watching Steady Invest, and today we're going to be talking about Air Canada and Cineplex. Ticker symbols AC and CGX, and they both trade on the Toronto Stock Exchange. And I was actually doing research last night on these two companies, and today we got the news from Pfizer and their 90% effective vaccine, and that changes everything. Both stocks rallied pretty hard today. It'll be interesting to see how the market continues to react to this news. Before we get to the video, smash that like button. If you're new to the channel, hit that subscribe button, and let's get started. Let's start with Air Canada. So we closed on Friday at $15.82, and right now we're at almost $20, so a 25% gain. If we look at the all-time chart, we were doing really well right before the crash. We were trading at $51, and look at that. If you bought the stock back in 2012, you could have 50x'd your money pretty much. And if you bought in January, you would have lost 75%. And we can see ever since the crash, then we've been trading sideways anywhere from like $14, $15 up until $20. And one time we hit $23 over here. Currently at a $6 billion valuation, and as of Friday we're at like $4.5 billion. So pretty much today, $1.5 billion of investors' money went into Air Canada stock today. I really like this headline. I think it's really telling of the reality of the situation right now. The sentiment on Air Canada right now is, it used to be $50. It's trading at $15, $20 these days. It eventually has to recover. The government has to bail us out, and it'll be fine after a while. And that makes sense, but let's take a deeper dive into that. Looking at the TSA checkpoint numbers in the US, I'm sure Canada is very similar. The black bars indicate 2019, the blue bars 2020, and look at a huge drop off back in March over here. That's absolutely crazy. So we're still not close to where we were at all last year. And it can't be overstated how much money Air Canada is losing every single day. Right now, the company is still burning more than $1 billion every quarter. In 2020, total losses could approach $5 billion. Executives believe the company has around $9 billion left in liquidity. In practical terms, that means the business only has 12 months or fewer before the market could pull the plug. Are you willing to bet that conditions will rebound strongly before then? Another article. Earlier this month, calls for government bailout grew louder, with two labor groups representing Canadian pilots asking Ottawa to offer low-interest loans of $7 billion to the country's airlines in a bid to keep the industry afloat. And one analyst said this, and I really like it: "We never want to base an investment on the government bailing out a company, because that obviously means that this company is in some trouble financially and the fundamentals are deteriorating." And how many times do I say your investments should be based on fundamentals? Before the virus, the fundamentals were amazing, but out of nowhere, it just showed up in our lives, and then the fundamentals are no longer the same. And when there's a sudden shift of fundamentals, you have to be honest with yourself, whether you're a shareholder or not. Are these fundamentals promising or not? And back to this headline, is Air Canada closer to $50 or $5? Now obviously today, sentiment's been really good. Who's to say that sentiment's actually going to last? It might, but you have to take into consideration back in January, everything was going right for Air Canada. I actually took a flight back in January on Air Canada, and I remember thinking how great of a company this is. I wish I was a shareholder, and this is before I even understood stock. A few months later, or less than a year later, my sentiment's completely different. Another quote I like: "Airlines will face a difficult long-term pricing battle due to the supply-demand imbalance." Back in January, Air Canada could charge you like $5,000 for an extra bag. Okay, maybe not $5,000, but they could have charged you whatever, and then you would have had to pay it, or you couldn't bring that bag. Do you think they still have that same power now? No, of course not. Look at how many people are flying compared to last year. They need as much revenue as possible. So whatever they were charging for an extra bag before, if they're charging you just half of that right now, at least that's some revenue for them to have in their pockets. So looking at the price right now, it's $20. It was at $50 when everything was priced to perfection, leaving us 150% upside. But for that to happen, they need to be as financially sound as they were before, they need more passengers flying, and they need to not go bankrupt. Kinda important. And this 26% can also be deceiving. We got amazing news today. Stock prices don't follow reality all the time. This is just based on sentiment today. How long that lasts could be anyone's guess. I wouldn't be surprised if the stock goes down 25% tomorrow or 25% up, or over the next coming weeks. The risk reward just doesn't add up for me. But who knows, maybe we get back to normal in a year from now, and then we're seeing this at $30. And to mention, the Canadian airline that I like a lot more would be Cargojet. Funny enough, it dropped 13% on today's news. But you can also look at it from the standpoint that we're also up 30% from where we were in early September. Alright, and next one we have Cineplex. This one went up 34% today. Holy smokes. Now Cineplex is a bit different from Air Canada. Air Canada, we saw it went up and up and up, up until the crash back in January. We've been downtrending for the last few years now. Ever since it peaked at $52, it's just been a downward spiral. Down 86%. Before the stock crashed back in February, last December it went up about 42%. Because of this deal, because Cineworld was supposed to buy Cineplex for $2.8 billion, and then things didn't go as planned, it hit the fan, and then Cineworld said never mind. And then Cineplex said, oh yeah, let's see about that. And look how Cineworld did today, they went up 40%. And because they trade in the UK, the news about the vaccine didn't come out till noon, and then look how much it spiked up at that point. 58%. But we can see, just like Cineplex, it's been downtrending for the last year and a half. Down 87%, including today's spike. Why is that? Unlike the airline industry, cinemas were already battling headwinds before the pandemic changed everyone's life. The rise of streaming services like Netflix, Amazon, and Disney Plus had pulled many consumers to commit entirely to home entertainment. Cinemas have been forced to rely on big blockbusters for the bulk of their revenue. Looking at the chart, so we were at $33 before the crash. And then we bounced around $12, $15. And then we went down even more to $10, and then even more to $8. And then in October we lost another 30%, and then we were trading just under $5. And that was around October 5th. Looking over here, the October 5th plunge shows the risks of trying to catch a falling knife. And for those that don't know what a falling knife is, it's when a stock keeps going down and isn't rebounding. However, the upside potential is significant if Cineplex can get through the pandemic. If you think a rebound is on the way next year, it might be worthwhile to start nibbling on Cineplex stock near today's price. Another way to look at it, valuation. The stock has fallen too hard, too fast. Everything that could have gone wrong went wrong for Cineplex. Immense business erosion can be expected to wait for years after the pandemic concludes. But with a somewhat decent liquidity position, Cineplex can survive the crisis. The balance sheet is on unstable footing. It's hard to see a scenario where we rise out of the pandemic without a beloved Canadian entertainment company like Cineplex. Now, all those articles were written before today's jump of 33%, and we're currently looking at a $450 million market capitalization. So just today, about $150 million went into the stock. And similar to Air Canada, if the company actually survives, it'll eventually recover, and this price will look like a discount. But again, who's to say we don't see $4 in the near future, or $3? There's just so much unknown about these two stocks. But if you believe in the recoveries and the current valuations, it might just be worth it to take a flyer on them. And those are my thoughts on Air Canada and Cineplex. They really took off today. It was like watching a movie. But that's just me and what fits my goals and my portfolio. And one thing that I learned in the past few months from investing is that I don't need to be a part of every single stock out there. Air Canada and Cineplex are both really popular, but I don't need to be in them. There are thousands upon thousands of stocks out there. And without a doubt, if you do your research, you'll find those that have potential returns like Air Canada and Cineplex with way less risk. Anyway, that's all we have for the video. I hope you enjoyed it. If you're new to the channel, hit that subscribe button. Everyone, smash that like button and drop me a comment. Let me know if you're buying or selling Air Canada or Cineplex. And if you're in Canada and want to start investing or trading with Wealthsimple or Questrade, use my links below. We'll both get free money. See you guys in the next video.